Almost one of the quarter of trading on US stock exchange is being done by individuals or retail investors. And this portion of investors has been rising along with the rise of broker apps like Robinhood, which are actually democratizing the investment opportunities. And this change is pushing the limits of classic finance industry. Yes, I'm talking about 24/7 trading of stocks. Is it good or bad for market participants? Well, right now we know that stocks are only available to trade between 9:30 a.m. to 4 p.m. from Mondays to Fridays. And this format is historical throughout the decades, but with the age of cryptocurrencies being available to trade all the time and also the commodity and currency markets available to trade throughout the day and night from Mondays to Fridays. The notion of making stock exchange trading available all the time is getting quite popular. Even popular at that, major players are taking notice about it. Like recently, New York Stock Exchange ran a poll about 24/7 stock trading on the exchange. Well, results are not available right now, and also new exchange named 24X is waiting for SEC approval to allow this new model of trading. But it's kind of already available, like on Robinhood in collaboration with Blue Ocean. This facility became available recently, led by demands of retail investors. Robinhood allowed trading of stocks of limited number of companies from Mondays to Fridays all the time, 24 hours, but not on Saturdays and Sundays. Well, this kind of state is not directly by exchanges on which those stocks are actually listed, like New York Stock Exchange. This all happens privately on Robinhood, with a bunch of other limitations like delay in execution of orders. Good thing about 24/7 trading is that it will provide the convenience for retail investors. An office worker can come home at like 5 p.m. and after that he can easily trade stocks like at 9 p.m. or 10 p.m. or any time which suits best for his personality or his strategy. Just like crypto markets. So this thing is huge for 1/4 of the market participants. And like people in Asia or other parts of the world can easily bypass the limitation of time zones to trade stocks at any time, like the area in which I live. The US stock market that's open at 6:30 p.m. and closed at 1 a.m. So in the US markets, where most of the trading volume is just around opening and closing time, it's maybe hard for people in my area to catch up around this time schedule, like maybe at 1 a.m. So this ability of 24/7 trading will solve most of the problems of retail investors in different time zones around the world. If this new model is allowed, then it will certainly smooth out the markets, as most of the trading volume is just around opening and closing time. And with this new model, there will be no opening and closing time. And most of these huge volumes are just the responses to the good or bad news that companies start queuing off odds. So when there will be 24/7 trading, then the reaction will be immediate and it will smooth the markets and make things in a flow. But there's a problem. As most companies drop news and statements when the exchanges are closed, so people can have more room to analyze these news or statements and make the rational decisions. But with 24/7 trading, there's a greater chance of people making instant but irrational decisions. Also, if the US exchange adopted this new model, that there will be an inflow of huge amount of capital from other parts of the world. Because people want to trade in the world's biggest financial market with ease of doing it anytime. Isn't it good for US? Well, it may seem good for US, but it will lead to extraction of capital from local exchanges of those countries which are already competing to US. This new model will also have bad effects on the mental health of the professional traders with FOMO, fear of missing out of a good opportunity while sleeping. Yeah. Well, this will become manageable with time, but according to experts, infrastructure is the biggest problem in shifting towards this 24/7 trading model. A lot of investment will be needed to do this, but also the things that are common between decades is not easy to leave. Not just traders need to adopt, but also the planning houses, the businesses also need to watch, which is hugely difficult. So I got my hands on a study by authors from Stanford and Washington University, and its findings clearly say that limitation on trading hours increase our retail traders' performance. And as this 24/7 trading will be most beneficial to retail investors around the world in terms of accessibility, adopting to it will certainly have bad impacts on performance of traders. So sticking to the current model is the best way to go, but what's the point of this whole video? If nothing needs to be changed, then why this idea is on the desk of New York Stock Exchange? Yeah. Well, this idea originated from the crypto markets available to trade all the time. And with the pace of innovation and globalization, this idea may seem progressive towards more freedom. But these are the stocks of real businesses, not some shit coins to trade. Stock markets have bigger real-life implications affecting businesses, consumers, and broadly overall economy of a country. So a major change like this is just kind of a back on the global economy. So I hope I made these points clear to you, and don't forget to show some support. Bye.